Hello, Oracles. Well, this morning I woke up, and for those of you who have been following me for a while, know that I'm a big fan of little signs and signals that let me know that I'm going in the right direction and making the right choices, because, we never know if we're following the right path or not until we go down that path. So I always look for these little signs, and this morning I woke up and my delivery date for my Tesla was pushed up again. Very pleasantly surprised to see that. And then date window now is November 9th to January 4th. That is the day after my birthday to my sister's birthday. So that to me was a little sign saying that going in the right direction. So with that said, I now look at, well, that's awesome that my delivery date was pushed up. So what could be the reason that it's being pushed up? Well, my initial reaction is obviously because production is speeding up and ramping up faster. Totally to be expected. We saw that when we had record high production in June, so we're just expecting that's going to be going forward. We know that we're going to have a little downtime in Shanghai, which is going on right now. We're going to have a little bit of downtime in Berlin. Sounds like a couple of weeks down in July. Saw some confirmations of that on Twitter today. And this is fine because in both scenarios, it's downtime so that they can improve the systems so they can produce vehicles faster in the future. So these are good things. So now looking at Austin, which we have very little information about, all we have out of Austin is that we know that the 4680 ramp is slower than expected. They've brought over 2170 tooling, and I have a feeling that the reason that my vehicle was pushed up was because of the fact that they have the 2170 ramp going on in Austin right now for the long-range Model Ys, which we know are coming out of there. Now, another reason that it could have gotten pushed up is because of cancellations of orders. Now, it comes in a first-come, first-served basis. Tesla was prioritizing some of the higher-end vehicles for margin purposes early on. So sounds like they're not doing as much of that now, especially now that the quarter is over. They'll probably get back to regular production on these things. But with that said, there could very well also be some people who decided that, they want a vehicle sooner and they don't want to wait. So they perhaps have canceled the order and decided to order something else that is available. We've heard Hyundai is doing relatively well recently. So perhaps that has happened. Or perhaps some people are just like, we see a potential recession coming. We don't need a Tesla right now. We don't need a higher end vehicle. Maybe we're going to save our money as a nest egg and a safety net rather than purchase the vehicle. Again, I have no confirmations of any of this, but it would be wrong of me to present to you guys an only bullish scenario. This is a potential possibility. Troy Tesla has a chart up showing that demand year over year pulled back a little bit in June. So we'll see if that continues into July. Honestly, it's not a terrible thing for that to happen. Obviously the reason that Tesla's been raising their prices up is because they're trying to pull down demand. Like having a 1 year lead time, it's pretty daunting for a lot of people, especially when, in the past, relatively recent past, you could go to a dealership and be like, hey, I want that car on the lot and I'll take it. Now you're ordering your vehicle online, which is significantly more convenient. However, having to wait 12 months for it is not so convenient. So, we'll see how things play out. But obviously right now, production is the top concern on everybody's mind when it comes to Tesla, or at least it should be. As an investor, production. They have so much demand right now. It's just a matter of, can they produce enough to keep up with this demand and not lose any of their customers to like a Hyundai or any other company that's out there. Now, we can discuss all day long about which vehicle is better, but when it comes down to it, if you need a vehicle and you can't get a Tesla, you're going to go with whatever vehicle is available. And in that type of situation, the available vehicle is the better vehicle because you need one. So again, lots of things to play out. This is not, being bearish or anything towards Tesla whatsoever, just being realistic based upon, my observations as to what's going on with my own personal vehicle. And these are some of the numbers to pay attention to when we get to Q2 earnings, because it's not so much about dollars as much as it is about units sold. So as of right now, it looks like Tesla is the only one who is up year over year for Q2 when it comes to deliveries. We still have some other manufacturers coming in, but many legacy autos are down significantly. Honda's down like 60-something%. It's pretty ugly out there for sure. Now, I totally do expect that next year, once the supply chain issues, alleviate, and these companies are pretty beat down from the last 2 years, they're actually going to show growth again next year. That's no doubt in my mind. That's just normal, and that's them running their business. So they'll get themselves back to a positive growth rate next year. And so then the question comes in to, what is next year going to look like, where Tesla is comparing itself to a year this year where they were still growing versus legacy auto, which was shrinking this year. So what are we going to see for growth next year when we, have a different playing field going on? So that'll be interesting to see next year. But going into Q2, let's pay attention to the units that are sold, because the way I look at it, like in my business myself, our numbers were doing extremely well for the year. But when you have inflation pushing prices so high, it's easy to beat last year's numbers because, well, inflation pushed those numbers up and units are still being sold. But I have definitely noticed a significant drop in foot traffic. And that's the key piece going forward, because when prices do come down, are you still going to have that foot traffic there in order to keep sales high? And so this is why it's so important to look at units sold and demand. And like I said, Troy Teslake was noticing that initial demand was pulling back a little bit in June. We'll see how that goes in the future. And I think what's going to end up happening is once Tesla brings production up higher, then they'll have that pricing power as well, because I know a lot of feedback out there is, well, Tesla doesn't have a lower priced vehicle like some of these other automotive makers. Well, then my pushback to that is, well, what's the cost on those vehicles? Because as of right now, it sounds like the majority of EVs that are being sold out there are being sold without a profit at all. And so if we have vehicles that are being sold without a profit just because they're a lower price point than Tesla, well, then Tesla can just bring down the prices on their vehicles to be able to compete with the lower prices of the other vehicles, and Tesla would still be making a profit when the other companies would not. And this is why we've been talking about pricing power being so vitally important during these times. Because if we're going to be going into a potential recession, maybe people don't have the same money to spend that they used to, maybe the lower end vehicles are the way to go. Well, guess what? If Tesla brings their prices down, that's going to bring demand up for Teslas. So the only way for the other competition to be able to compete again with Tesla is to lower their prices even further. And if they're not making a profit on their vehicles now, with them anticipating costs of supplies going up, that means they're going to be even less profitable in the future. And that's not going to bode well for a company, because you need to make money in order to get by. And if you're not making money on an EV that you're looking to grow into your business and turn over entirely, then you're not going to make it. So yes, while there is competition out there, and there are vehicles that are being sold for a lower price than Tesla's, Tesla still has the pricing power advantage over all of them. So all Tesla needs to do is bring their prices down to get it to a comparable level. And then those other companies have no way of surviving because their costs are so much higher than Tesla's. So again, going back to the point about it's all about vehicles being produced in the future. And so looking at June as being a record high production month, seems like Tesla was at about 130,000 vehicles produced for the month. So if you annualize that, that's 1.56 million vehicles for the year. Obviously, we're going to be ramping higher than that. We've got Shanghai going through some retooling that's going to expand from 17,000 a week to 22,000 a week. We've got Berlin that's going to be upgrading as well. And thanks to Kairev, who is on the channel here, who is also in Discord chat, who is known as TeslaBot over on Twitter, broke down some of the numbers for Berlin, looking like they're going to be cutting the time down from 180 seconds per vehicle to 30 seconds per vehicle, which is a 6x improvement. So looking at that, going from about 1,000 vehicles per week right now up to about 2,500 to 2,600 vehicles per week by the time they finish with this upgrade. And we've also got Austin right now pushing out the 2170 long-range Model Ys, so they're expanding their ramp there as well. So my guess is that we're going to be paying attention to this over the next couple of months. The third quarter is going to be, I think, very good. We're going to see a strong finish to Q3 because that's where they're going to have a lot of the retooling being done in the factories. So we will see some nice growth out of those factories, and we'll probably see, I'm guessing right now my ballpark is around 380,000 for Q3 being produced, probably 400,000 if they can really push it. But that is still significantly higher by about 25 to 30% over Q1. And that would be with downtime in Q3 for all of this retooling. So then you start looking at Q4. Q4 is going to look pretty magnificent. I'm guessing that in Q4, we're going to be hitting an annualized run rate of probably 2 million vehicles per year. And that will give them an entire year to continue ramping up in Berlin, Austin, and Shanghai, and then pushing that extra little bit in Fremont, and getting their expansions up and running to continue that 50% year-over-year growth. So for this year, in order for them to hit 50%, they need another 839,000 vehicles delivered in the second half of this year. to get themselves to 1.4 million vehicles delivered for the year. And then next year, they would need to have 2.1 million vehicles delivered. So if by December they do continue this ramp pace that they're going on, they'll hit a 2 million vehicle annualized run rate by December, which means that hitting that 50% year over year by next year, it shouldn't be a problem whatsoever because they only need to bump it up 5%. And then of course the next question is will they have the demand to be able to sell all of these vehicles? Well, they've proven as of right now that they definitely have all the demand that they need. They can't even keep up with it. So will that continue going forward? Well, again, going back to pricing power, Tesla has such amazing pricing power right now that they've got the leeway of being able to create and push off any demand that they want. So right now they have too much demand, so they raise the prices of their vehicles to bring that demand down. Well, if they want to bring the demand back up, they just have to bring the prices of their vehicles back down. They have a 30% buffer. You know, you're looking at vehicle margins of over 30%. So that says that we have about a 30% buffer to be able to move our prices up and down for Tesla, whereas every other automotive maker out there does not have that luxury. And so again, if Tesla needs more demand, they bring their prices down and they can still make margins on those vehicles. Everybody else, if they bring their prices down to be able to bring up demand, that just means they're going to be losing even more money. Now, when it comes to Tesla-specific headwinds that are in our control, 4680s are a big concern. I want to make sure we're, focusing on the 4680s and getting those up to ramp speed, because going forward, that is a huge piece of what is going to continue to keep Tesla ahead of everyone else when it comes to efficiency, keeping costs down. The Cybertruck is going to be a big piece of that. So the 4680 ramp is definitely a massive focus, but don't forget that there's a lot of other suppliers that are out there right now that are also helping in creating these 4680s between Samsung, Panasonic, LG. Lots of different companies out there also producing the 4680s that should all be getting up to speed for next year as well. So timing could be very, very good for Tesla to be able to get this up and running. So even if they're a little bit slower, the assistance that they can get from other suppliers should help them out. But it's definitely something I still want to pay attention to from Tesla's side, because when it comes to vertical integration, we want to make sure that Tesla is, getting up to speed with those 4680s as well. So when it comes down to stock price movements and where we're going to go, obviously no one knows for sure. The near term can be completely wild and go all over the place because, heck, people can move it for whatever reason they want, no reason whatsoever. Looking long term, obviously, I'm believing that we are going to be going up. My price target for the end of 2023 is 2330. That is pre-split. Once we get the split numbers, I will adjust all my valuations and price targets off of that. But until then, I'm going to go with pre-split numbers. So 2330 by the end of next year. So I've had many of you in the comments. Some of you are like saying, hey, we're going down to 450. We're going down to 420. Others are saying that we're going to be going up to 1300. So, hey, we're all over the place. Lots of different thoughts that are out there. A lot of people in mainstream media seem to think that we're going to be going down to 3,400 in the S&P. And if that's the case, it's going to bring Tesla with it. There's no ifs, ands, or buts about it. This year has been dominated by the macro. So regardless of what happens with Tesla's specific earnings themselves, we're going to most likely follow whatever the macro does. If it does well and goes up, then we'll go up with it. If it doesn't do well and comes down, then we're going to come down with it. And I think a lot of it's going to be based off of the CPI data that we're getting on July 13th. We're going to see what comes out there. Are we seeing another inflection point where we're coming down? So maybe the Fed can be more dovish. Are we going to hit that point of deflation coming in September where the Fed's like, oh, you know what? Maybe we were a little too aggressive. We need to U-turn, and then the market turns around in September. So maybe until September, we see a little bit of a rough time in the market, and Tesla does not go to the moon. Again, lots of unknowns in the near term. We've got the media who's going to go out there and let's see what articles they put out, because depending on how they want to spin it in their favor is how they're going to word how we did for Q2. Because based off of analyst consensus, yes, we met expectations. Based off of Q1 numbers, we were definitely down. Those of us who are in the know understand why we were down. Still disappointing, but we understand why, and we know that it's not a company-specific situation and issue. It was more of a macro situation with the lockdowns over in Shanghai that caused this all to happen. And I know some of you have expressed why, this is a reason why China is such a liability for you guys, because we don't know. Is Shanghai going to all of a sudden lock down for another month in Q3? We don't know these things, but we do know that we have Austin and Berlin also coming up to ramp. Sure, they're nowhere close to where Shanghai is right now, I get it, but they are getting there and they're on their way. So with each day that passes, it becomes easier and easier for Berlin and Austin to offset any downtime that's going on over in Shanghai. Let me know your thoughts in the comments. Do you think that Tesla's going to be able to get themselves to a 2 million vehicle run rate by the end of the year? Do you think that they're going to reach it, or do you think that they're going to fall short or maybe exceed it? Let me know your thoughts in the comments as to what you think the end of the year run rate will be for Tesla. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat. That link is down in the description. And if you'd like to support the channel any further, I do have a Patreon. That link is also in the description. Thank you so much. Have a great one.